ladies and gentlemen. Thank you very much, Taiwo, for your opening remarks. Taiwo is the alternate chair of the Professional Services Group, and Taiwo is a partner with PwC. Thank you for all the great job you've been doing with the Nigerian-British Chamber of Commerce, PSG. Ladies and gentlemen, I'm quite delighted to welcome everyone to this event themed Finance Act 2020, Key Changes and Implications. It's a webinar being organized by the Professional Services Group of the Nigerian-British Chamber of Commerce. The NBCC is a name that many of you know, certainly those who are on the panel today, and a lot of you who have joined this webinar. It is the foremost bilateral chamber of commerce in Nigeria and was established 43 years ago to promote trade and investment between Nigeria and Britain. The NBCC is affiliated with the British Chambers of Commerce, which creates access to 53 chambers across the UK and 66 other international affiliates. I have the pleasure of using this opportunity of today's webinar to invite companies who are not yet our members to please come and join us and have access to the tremendous benefits attributable to membership of the foremost bilateral chamber in Nigeria. The chamber currently has about 350 top corporate organizations, and you can name all the major names in this country, in their economy, they're part of us. And from all sectors in Nigeria and the UK. We are encouraging participants at this event to please go to our website, complete the admission process, and then you will have the membership of the chamber if you qualify. As we continue to adapt to new economic realities, the Act, which was passed to provide economic recovery and resilience of the nation's fiscal structure, is actually a very topical issue at this point in Nigeria. With more than 80 amendments to existing tax and regulatory legislation in Nigeria, the new Act aims to address ambiguities and to provide clarity to certain provisions and to provide certain incentives to companies to mitigate the impact of COVID-19. Of course, as you will expect with this kind of legislation, there has been various reactions and counter-reactions from commentators, business owners, and other relevant stakeholders. Some have said the new act seems favorable to small-scale businesses and encourages growing the Nigerian companies, while others have frowned at some of the new amendments as it appears to put more pressure on the citizenry while increasing government revenue. It is therefore important to understand these key changes and their effects on the general economic outlook and how these changes will affect you as an individual, will affect you as a business owner, and as a top manager of any organization in any sector of the Nigerian economy. To take us through these key changes and implications, I'm delighted to welcome today's speakers. These two gentlemen and moderator are some of the finest in our nation. Taiwo Oyedele is the Fiscal Policy Partner and West Africa Tax Leader at PwC. Taiwo is the author of Insights on Taxation and Fiscal Policy, Top 50 Tax Issues in Nigeria, and Nigeria Transfer Pricing chapter of the IBFD publication, and is a contributor to the annual Doing Business report of the World Bank. He's a prominent speaker at conferences and a regular guest on various business and economic programs on TV, radio, and on online media. He's the research director for the Fiscal Policy Roundtable of the NESG, that is the Nigerian Economic Summit Group. He's a member of the ACCA Global Governing Council is chairman of the Taxation and Fiscal Policy Faculty Board and a member of the Ministerial Committee on the implementation of Nigeria's national tax policy. He spoke last year on the NBCC platform on the new Karma 2020 Act and was quite enlightening and insightful. And I must say, we're quite delighted and happy that he graciously accepted our invitation again this time around. Taiwo is an alumnus of the London School of Economics, Yale University, and Harvard Kennedy School Executive Education. He's the founder and president of Impact Africa Foundation. The second speaker, again, is one of the finest that our nation has ever produced. Apart from his very keen legal mind, Theophilus Emuwa represents the ideal professional that we would like to see in Nigeria. He's managing partner of Aelex. Theophilus is widely acknowledged as one of Nigeria's leading tax lawyers. His tax advisory profile spans across all types of income taxes, as well as capital gains tax and indirect taxes, such as VAT, sales tax, customs and excise duties, and stamp duty taxes. He holds a bachelor's degree and a master's degree in engineering from Imperial College, London, and is a member of Grace in London. So Theo is not just an engineer, he's also a tax lawyer. He was for several years the chair of the tax committee of the section on business law of the Nigerian Bar Association. He's a member of the taxation section of the IBA and is currently the vice chair of the International Fiscal Association of Nigeria. Theophilus Emuwa is a fellow of the Chartered Institute of Taxation of Nigeria, and he has served as the vice chair of the Tax Law Review Committee of the Institute. Also, he contributed the chapter on international taxation in the first edition of CITN Nigerian Tax Guides and Statutes. He was formerly the deputy editor of the Nigerian Tax Notes. Theophilus Emuwa is managing partner, as I said earlier, of Aelex, which is one of the most respected legal firms in Nigeria. Today's moderator for this webinar is Olasukomi Adenuga of Workforce Learning. Olasukomi is a seasoned business and partnerships executive with over 20 years experience creating strategic alliances with leaders of organizations. With strong, effective communication skills and management style, he's highly experienced in developing and managing assessments, learning and development strategies. His contribution to organizations include business development, team leadership, strategic planning, and sales. He analyzes co-operational business functions and implements the most appropriate solutions to drive sustainable business growth. I have no doubt, ladies and gentlemen, that the attendees of today's webinar will be enriched from the presentations of these world-class professionals. I wish to thank you all for your attention and now have the pleasure of inviting Mr. Olasukomi Adenuga, our moderator, to commence the panel discussion. Thank you all, and God bless you. Olasukomi, please, you have the floor.
Thank you very much, Mr. President, sir. Thank you for the warm introductions and welcome onto this webinar. So just riding on the back of what Mr. President has just said, today this webinar that we're gathered here for is titled the Finance Act 2020, Key Changes and Implications. And just like Mr. President said, we've got two distinguished speakers who clearly are very experienced in this area, and they will be helping us with unpacking knotty areas and concerns that individuals as well as businesses will have regarding the Finance Act. So joining the panel today is, of course, Mr. Theophilus Emuwa from Aelex Partners. Could you please, once you introduce, you turn on your cameras, please. As well as Mr. Taiwo Oyedele, who obviously needs no introduction when it comes to this Finance Act and his contributions, immense contributions within this space. So just as a preamble, and I'll be leveraging on what Mr. Taiwo Yaniro and Mr. President have said. On 31st December 2020, the President Muhammad Buhari signed the Finance Bill 2020, which is often known as the Finance Act, or the Act as we'll refer to it going forward. He signed it into law, and that became effective on the 1st of January 2021. The Finance Act, as currently is, introduced over 80 amendments to existing tax and regulatory legislations in Nigeria, including the capital gains tax, companies income tax, personal income tax, VAT Act, the Nigerian Export Processing Zone, Oil and Gas Export Free Zone Act, the FIRS Establishment Act, and the Customs and Excise Duty. Just to mention a few, because it's really quite a lot of changes. So specifically, the Finance Act amended about 14 principal tax-related legislations, and really the thrust of the legislation includes boosting government revenue by preventing certain base erosions and also streamlining areas of regulatory conflict, as well as clarifying certain ambiguities. Beyond that, it was also geared towards providing some level of fiscal relief to small and medium enterprises who are involved in key or priority areas of the economy. Additionally, the Act established the Crisis Intervention Fund and unclaimed funds and the unclaimed trust funds, which were set up in response to the COVID-19 pandemic and obviously looking at its impact on government budgets during the 2020 fiscal year. So they were really looking at addressing all the crisis-related expenditure and exigencies going forward. So, however, since the Act was signed into law, it's generated mixed reactions from stakeholders as well as analysts. And that's why we've constituted this distinguished panel to help us address some of the key issues that have, been thrown up as a result of the signing into law of the Finance Act. So to get us started, I'd like to throw my first question to both the speakers, and it's really just looking at it from a high level. Finance Act 2020, what are your thoughts generally? I'll direct that first to Mr. Emuwa.
Thank you very much, Nasikomi. I think, the 2020 Act is a continuation of the 2019 Act. So the thinking and the direction was already set by the 2019 Act. What we need to remember is that before 1999, every year, the government, then it was a military government, used to come out with something called Finance Miscellaneous Provisions Decree. And that was essentially a decree meant to amend substantive legislation on taxation. And from 1999 till last year, this was not done, which meant that amendments were slow to happen. Now, the idea was, recommenced, and early last year, the 2019 Finance Act was signed, and it was clear that the direction now is to amend substantive legislation every year with this sort of legislation that touches on different sections of each act. In terms of the direction, government is struggling with revenues and resources to do its job. That is clear to all of us, and it is looking for ways to raise more. So one thing that was done a year ago was to increase VAT from 5% to 7.5%. That was a significant jump. That was the first time the VAT rate was being increased since 1993. I mean, I know that there was an attempt in 2007 or so to increase it, but that didn't succeed. So the direction is tighten things. Now, 2020, they've simply gone a step further. Some things in 2019 weren't so well, articulated, so they've tried to clean them up. But I think that at the end of the day, it is more money to government from taxation that is the ultimate. I don't think we can get away from that.
Okay. Thank you very much, Mr. Emuwa. I mean, that's put very succinctly, and you've kind of captured your own thoughts on it. But I'd like to throw the same question to Mr. Oyedele. Your thoughts on the Finance Act 2020. So a brief high-level summary, 3 minutes. Let's know what you think of it. I know you probably will be coming at it from a different perspective from Mr. Emuwa, but your thoughts will be quite interesting here. What do you think at a high level? 3 minutes.
Yeah, thank you very much. Let me just build on what my brother has said, Mr. Emuwa. I'll start by saying it is not a perfect piece of legislation. I'll be surprised if it were one. And it's also to be expected that there will be a mixed reaction. There is almost nothing you can do that to get 200 million Nigerians to agree on it. It would also be an unreasonable expectation, or maybe too optimistic. So, but if you think about it overall, within the context of the challenges facing the economy, within the context of the fact that government has very little revenue, I always say that even if you eliminate corruption and waste today, Nigeria will still be poor. It's also that same time when we have very little fiscal room that we have to then take care of more expenditure, including administering palliatives to the vulnerable sector. You may say the amount they've given is not significant, but imagine the amount given to airlines, the funds, various funds for small businesses. So within all of this, you're trying to strike a balance, and that balance would always be a delicate one. And no matter how you push it or pull it, you center it somewhere, and there'll be some stakeholders who are not very excited about it. We conducted a study of business leaders and executives, including SME owners, and there was a thumbs up of 92% overall in terms of support for the Finance Act. So I'll say on that basis, it's a good job that has been done. There's some areas where government could have done better. For example, I think that there could have been more collaboration and engagement with stakeholders that will span, if possible, a whole year. And I see that already. I'm getting worried already for 2021, because if you sign the Finance Act and you go to sleep until it's about 1 month before the next budget, before you start putting things together, you always have issues like these that may not come out well. And some of those examples would easily include the unclaimed funds trust fund to do with bank balances and unclaimed dividend. I think that's one area where government could have done better. You also have issues to do with the auto policy, where the stakeholders and the investors are saying, well, this is a policy somersault as far as they are concerned. But beyond that, I'll say if you think about the objectives of the Finance Act 2020 around ensuring there is counter-cyclical fiscal measures, of course, to stimulate the economy because of the challenges we had brought about by COVID-19, issues to do with creating jobs, economic growth, socio-economic development, and then also fiscal relief to the extent possible. And the fact that government said no new taxes, and they will not increase the rate of existing taxes. That is commendable, is the right thing to do otherwise would be insensitive and would actually be counterproductive. So I think, beyond one other thing that stands out for me in this Finance Act is, beyond the core legislations to do with taxation, there was also a focus and emphasis on issues to do with fiscal responsibilities and the procurement process of government. So I know that sometimes the problem we have is not the lack of legislation, it is how we implement them. But having a law in place is a good first start. And then you can then move on to how do you implement it? How do you get state-owned enterprises to be more prudent, to be more transparent, and be more efficient? How do you get all the arms of government, not only the executive, but also the National Assembly, to follow due process in awarding contracts. So all of these are included, and overall, like I said, I think it is commendable.
Okay, thank you very, very much. I think you've brought also the finance experts' perspective into this. One thing I do like is the fact that you said, fine, the law is imperfect, the act is imperfect. Expecting it to have been so would have been, sort of building some castle in the sky. However, implementation of what we have would be what is key. And looking at last over 20 years, and I think the last 2 years have been the only time that the Finance Act itself has been really addressed, and there have been amendments done in 2 consecutive years. There have been very cursory looks at the Finance Act, which have been the first time this is done in 20. This has been done in 20 years, and I'd like to throw this to Mr. Emuwa. Does it portend a positive sign? And in addition to that, where do you see the biggest impact of this change for the Finance Act on businesses in Nigeria? So if we can just do, I'm trying to also manage time. So if we can just do it in about 3 minutes, it would help.
Okay, certainly. I see it as a positive, because it means that where change is required or needed, it can be done more quickly. If we identify a problem in a piece of legislation and it takes 10 years to fix it, a lot of damage is done by the time you fixed it. So that's certainly a positive sign. I mean, there are many examples I can give you about problems that weren't fixed for a long time. I mean, there was a provision, what they call the excess profits tax for those who But what that said essentially was that if you had profit in a year and you didn't distribute that profit, but you paid tax on it, if you chose to distribute that profit 5 years later, you pay tax again, which everybody knew was not the correct thing, but nobody fixed it until last year's Finance Act. So it's things like that this annual review will do. And when you remember that every year you have a budget statement, and you need that budget statement to be aligned with the legislation that's leads to revenue generation, tax revenue generation, then you have to be doing this annually. I mean, that's what most countries do. They have an annual equivalent of the Finance Act, and that's the way to do it. Otherwise, you have legislation which is no longer fit for purpose, but it takes too long to fix. So it is certainly a positive step, and something that we're glad. In fact, in the good old days, the military government sometimes did more than one Finance Act in 1 year. To tell you how fleet-footed they used to be. If they realized that okay, we did something in January, it's not quite right, but they fixed it in June. So I don't think we should say to ourselves that if there's a problem we've seen in the December Act, we'll wait till December 2021 to fix it. If you can fix it next month, why not? You see, so that's what I'd like to say. I think that's the main thrust of your question. Unless there's anything I've missed, let me know.
Oh, absolutely. You captured it quite rightly, and it's I think what you've also highlighted that whilst in the previous years government itself has been a little bit tardy in really addressing this. I think there is some concerted effort now to being more proactive in looking at this act, looking at the provisions, and seeing what kind of reviews we can do in a more consistent and timely manner. What I see is the fact that when we look at when we say the Finance Act, and I think if we're looking at the larger business ecosystem, one of the first things that came up was, looking at it from a possible taxation perspective. And when the issue of tax is really broached, it often elicits a lot of concern from individuals as well as corporates. Given the multiple tax regimes we have at state and probably, at national and subnational levels. One feature I see in the Act is a desire to bring a lot more people into the tax net. This is particularly not increasing taxation, but dragging a lot more people into the tax debt, as well as ensuring compliance. So while it doesn't necessarily introduce any tax increases, so Mr. Oyedele, I'd like to know, what would we really see? What are the tax implications for small and medium business? Because I think this will be the larger concern for these businesses.
Mm-hmm. Yes. I think maybe I'll say on balance, the SME sector are the biggest beneficiaries of whatever leads to government is able to offer under this Finance Act. And I'll speak to a few of them. So small businesses were exempted from companies' income tax in the Finance Act 2019, and also exempted from having to charge VAT on their goods and services, so which is really good because that takes away a lot of their burdens. But the law wasn't clear about exemption from education tax. So this Finance Act 2020 now says specifically that they're also exempted from education tax. In addition to that, you have issues to do with preparing audited accounts. And those of us in this industry or area of specialization, we know very well that an audit can be very expensive. So imagine a small business that is just struggling to survive. Some of these small businesses have only the owner and maybe the spouse as the employee. So they're just two of them. Sometimes it's only one person. And then they need to do an audited account and they have to spend millions. So it doesn't make a lot of sense. So this law now says, as a small business, medium-sized company, FRS can just indicate the form of accounting information they want from you, which you don't have to audit. This also aligns with the provisions of CAMA 2020. So in addition to that, you have some exemptions that, though we're not targeted at SMEs, but SMEs will be the biggest beneficiaries. And one of that is the exemption of minimum wage earners from personal income tax. So if you really think about people who earn 30,000 naira per month or less, they're mostly employees of SMEs. Some of them are on 20K, 25,000, some are even on 15,000. But the reality is many of those SME owners were not paying the personal income tax anyways. But here is where the issue is. The taxman will then show up once in a while and say you have not been paying. Of course, they don't know how to calculate it, so the taxman will, exaggerate the amount they are owing, and then they start negotiating. So they can start with 2 million, and then you end up paying 500,000. So the fact that the law now says you don't have to pay means that if anybody shows up to say, okay, you have not paid, you can just remind them that there's a law that says I don't have to pay. So I think these are some of the impacts I see for MSMEs.
Thank you very much. Just to ride on that very quickly, one of the things you've highlighted is looking at the fact that, I see that as very big when you look at people who fall within the minimum wage category, who are now tax exempt. However, would you say that will be, one of the biggest changes you see, or which ones would you say are really most significant, that's really most impactful in this new act?
Yes, clearly this exemption of minimum wage will be the most impactful if I look at the entire Finance Act. If I want to mention maybe one or two more, I'll say maybe the reduction of import duty and import levy on vehicles, all manners of vehicles from tractors to mass transit buses to cars. So I think that is significant in addition to the exemption of VAT on airline tickets. So flying between any cities within Nigeria is now also VAT exempt. That's also considered to be significant. And of course, the controversial unclaimed trust funds about dormant account balances and unclaimed, it is significant. And it's not surprising that people are not agreeing on it.
Yeah, thank you very much. That has been really contentious because it was seen as somewhat very radical, but I think jury's still out on if that's the right way to go or not, but we'll still let that be as it is. It's still hanging in there, well, still being dangled. We'll see how things pan out from there. But
can I just add something to what
absolutely,
Taiwo had?
absolutely, yeah. Please go ahead.
Now, you're talking about the exemption of people earning 30,000 and below. I think many people may recall that a couple of years ago, Lagos State put out notices in the newspapers reminding people that all their domestic employees were subject to PITA. So if you had a driver in your house, a cook, a guard, you were meant to be remitting PAYE for that person. Now, of course, they had the difficulty of enforcing that because it meant you'd have to go from house to house, say, okay, what do you have? You have a cook, you have a driver, you have a gateman, where's the money? So they didn't take it further than that. But the truth is, by the law, they were taxable. So this now clarifies, or at least, gives us, we can breathe a sigh of relief. So nobody's going to come to me and say, I didn't remit for my driver or my cook or my, gateman or what have you, because that was the danger. If they started on that in that direction, I mean, the number of people who are earning below 30,000 is probably more than the number of people earning above 30,000. Taiwo, you can correct me if I'm wrong.
That is very correct. That is
very correct. Yeah, if we look at the geographical population spread and demographies across Nigeria, I think that's really spot on. Just, I mean, for our audience, I'd just like to get, if you have questions, please put them in the Q&A chat box, not directly in the chat box. I think we'll take them on the Q&A. So as we progress, we'll go through the questions filter and direct them appropriately. One thing that I found also concerning here is, okay, the Finance Act has been signed and is somewhat meant to make life easier for businesses. And looking at it from a particularly tax perspective and obligations perspective. However, trying to connect that to the ease of doing business in Nigeria. And if we look at the 2020 rankings of ease of doing business in Nigeria, Nigeria ranked 131st out of 190 countries on the ease of doing business 2020 rankings. If we're going to look at it relative to the Finance Act, how will some of these reforms or amendments impact or aid the ease of doing business in Nigeria? And I'd like to direct that question to both of you, because I'm sure you'll be looking at it from two different perspectives. So, I mean, Mr. Emuwa, how do you think that would really help, given where we currently rank, and if it portends, it would significantly, positively impact the ease of doing business in Nigeria?
Well, what I will say is that, or remind us about, is that when you talk about ease of doing business, taxation is just one of many elements. And people, look at that and think that once you fixed it in this area, then you fixed it in all areas. There's a time when the thinking was that, incorporation of companies takes too long. 1 week, 2 weeks is too long. Can we speed it up because it will improve ease of doing business? The truth of the matter is that the time it takes to incorporate a company is just one element in the total time it takes to get the business up and running. You will incorporate the company, and then you must register for tax. To get the registration at FRS can take you more than 1 week, or it took you at CAC. So there are other problems, and that is administrative. So it's not the law doesn't say anything about, it says you must register for tax. It doesn't say how long it should take. So when you go there and you put in your paperwork, it could take a week or more. So fixing CAC and saying, okay, you can do a corporation in 2-3 days, that doesn't really change that much, the total time. You have things like, if you are a company that required an expired quota, you then have to go to the Ministry of Interior and apply for a business permit and an expatriate quota. That can take months. So even if it took you 1 week to incorporate, you then wait a month or two to get the rest of the paperwork in order to employ the people you want to employ. So really, ease of doing business is more than just fixing the speed with which you can pay your tax or the speed with which you can incorporate your company. Talking about speed with which you pay your tax, the process for being assessed for tax is also one that can be a bit trying, to say the least. They come, they audit you, then they do a report saying, well, this is what you owe. And then, you think you've settled it, and 3-4 years later, I get another letter from, LRS saying, well, for that 2015 one, there's still this issue we haven't resolved. And you say, but I thought everything was cleared, and this is 5 years later. Sometimes taxpayers end up sort of surrendering because they're asking you to prove something. The documents 8 years ago, you can't find them because you only keep documents for 6 years, so you're no longer able to prove that you did incur that expenditure. So you end up paying the tax anyway, just to get move the problem away. So that's the ease of doing business is more than just speeding up taxation.
Okay, thank you very much. I'll throw that question in the other direction. Just your thoughts on that, and that's interesting perspective you have put there, Mr. Emuwa. I mean, we haven't totally fixed the entire chain of the one element of it is just what we've addressed. So please, Mr. Oyedele, what are your thoughts on the Finance Act and the ease of doing business in Nigeria?
Yeah, so and I completely agree with Mr. Emuwa. Because I'm also very much involved with the ease of doing business ranking. So I just give a bit of perspective briefly in about 2 or 3 minutes. So there are 10 indicators and paying taxes is only one. So you're right, Nigeria ranks 131 out of 190 countries on the ease of doing business, but we're even worse on the ease of paying taxes, which is we rank at 159. So there are 2 dimensions to this. So there's the ease of doing business that would impact your ranking, the World Bank ranking. And that ranking is based on a case study company. So it's not a real company. It's a case study company because they want to try and compare Apple with Apple across the world. And you would imagine that is not easy. So some of the assumptions for that company is it does not enjoy any tax incentives. So if you like, give incentive from now until tomorrow, your ease of doing business ranking of the World Bank will not move because the assumption for the case study company is it is not entitled to any tax incentive. So there's that bit of what we have in this Finance Act that would impact on our ranking for the World Bank doing business reports, and there are those that would impact on ease of doing business in reality. So I'll just give a couple of them. So one, the use of emails to be able to correspond with the tax authority would improve the ease of doing business, both for the World Bank report and also in reality. Because to be honest, having to be in traffic, especially for those of us in Lagos, for 2 to 3 hours just to go and submit an objection to the FRS is kind of crazy, to be honest. So now you can just send an email, so you save time. And saving time means there's ease of doing business. We also have the Tax Appeal Tribunal now being able to, at least on paper, have their hearing virtually. So which means I can also sit down at home or in my offices and do my dispute resolution up to the TAT level. So we have a few of the amendments that are in the opposite direction, which means they will make doing business more difficult. One of it is more requirements around compliance for banks and other financial institutions, particularly as it regards common reporting standards. So these guys are now required to collate a lot of information, get it from their customers, and share with the authority. So I'm not saying it's bad or good, I'm just saying it places more burden on those people who have to comply. And then for non-resident investors, particularly the gig guys, so the obligation they place on them is difficult. So you have the likes of whether it's Netflix, whether it's Zoom, having to register for VAT in Nigeria, FAR returns, even though they're not physically here, they have to appoint a local representative for fiscal purposes. So these ones increase the burden of tax. Overall, I do think that the Finance Act would impact the ease of doing business positively, but it will be marginal.
Thank you very much. At least you ended out on a good note. We must look at some level of positivity in that regard, even though it will be marginal. But we know how we do. I think we do it in baby steps, and then ultimately we'll get there. It's quite interesting to note that just introduction of an email can solve quite a huge problem.
Yeah.
Once we're discussing, what I'd like to do now is take a few questions. A few people have put some questions in, and I'll sieve through Anyone is open to answering the questions. It's strange how time just goes by rather quickly, and we're trying to keep within time. So there's a question here. I'd like to say again, if you have questions, please put them in the Q&A as opposed to the chat box. So at this point, I think we have a video which you'd like to take. So we'll do that just right before the Q&A. A sponsor's video. So I'll sponsor it. So thank you very much, Aelex, our sponsors for this session. Lovely ad. So we'll go quickly to the questions, and I'd like to just distill from the Q&A chat box. While some questions may have been answered in the course of conversation, I will not go reading that any longer. But I have a question here that says, where a vendor qualifies as a small company and is not obligated to register for VAT, is the buyer, which is not a small company, obligated to back charge for VAT where the service or goods are subject to VAT under the VAT Act? It's a bit complicated, but Mr. Oyedele, maybe it falls within your purview.
Yeah. The answer is yes. So we call it, so the technical term for it is reverse charge. So the law says in 2019, as the Finance Act 2019 says, we are asking small businesses not to have to charge VAT. But if you are the one buying their goods and services, and you yourself, you are a taxable person, in other words, you have a turnover of 25 million or more in a year, then you have to self-charge yourself to the VAT. So for example, if you go to a corner shop to buy a mobile phone or mobile phone accessory, and let's say the turnover for that person is less than 25 million in a year, and you're buying it on behalf of, say, PwC, which is a business and is a taxable person. So I'll receive the mobile phone without VAT from the seller, and when I get back, I need to account for the VAT on myself and pay it to the FRS. So the answer is yes.
Okay, thank you very much. I mean, there's a question on what areas of imperfection can be distilled from the Act. Now, I think you've addressed some of that earlier, looking at certain imperfections, things that could have been done, areas that could have been incorporated, things that could have been looked at. We also have a question from Folusho Ajayi, who's looking at what's the definition of a small and medium-sized company. I want to believe you're looking at it in terms of revenue threshold, but you've defined it here. What's the sales threshold for a small or medium-sized company? So anyone want to answer that? What's the definition?
Yeah, that's quite straightforward. Under the Finance Act, 25 million turnover and below makes you a small company. Between 25 and 100 million makes you a medium enterprise. Although in CAMA, the threshold for not filing returns was 120 million, and so there was a discrepancy between what CAMA was saying or requiring you to do. So if you didn't need to do accounts at up to 120, but CETA was saying you needed to do accounts if you're about 25, then there was a bit of a discrepancy. But that's been fixed to some extent because it now says that the FIS can say for those kind of companies that, well, we'll tell you what to file. You don't have to file full audited accounts will tell you what they just giving us a statement might do. But it does present an area of challenge, because the taxman needs to have some data with which to assess for tax. And if you're not doing accounts, then it's really difficult for him. So the challenge is, how does the taxman do his job on the one hand? How does he make your life easier on the other? Or how does the government make your life easier on the other? And that's where difficulty is. Now, one of the things that the revenue authorities have started doing is using electronics and IT to access data. A couple of years ago, some people may recall that the FRS accessed people's bank details from straight directly from the banks. I was then able to say to different customers, we noticed that your turnover last year was over $1 billion, but you've not filed any tax returns, or the tax you paid looks too small. So they were asking the banks to stop that account from being operated until the customer comes to see us. So they were able to do this without even talking to the customer. They went straight to the banks, because now with IT, they can plug into the system and get the data. Now they're moving that to another level, where they're getting that now from retailers. So they can plug into the system of, say, Spa, and see what sales Spa is doing. Now, of course, Spa is a big retailer, but at some point they will come to the smaller ones, and they'll be able to see your numbers without having to disturb you about accounts and auditing and all that. But that's where we're going.
Thank you very much for that. And I mean, your response has clearly dealt with two other questions there, because we have some questions around, asking about definition of how you classify small and medium scale enterprises. At the same time, you're looking at, okay, if you're a company that's tax exempt, that's really you fall below that threshold. Does it now mean you do not need to do or have audited financial statements? I mean, I think that's what you addressed in your response now. I mean, to be able to clearly define where you stand, you must have your books to be able to show that this is where I am. Exactly. Question here from Rubina says, from the perspective of international taxation, what are the measures in the finance bill which addresses BEPS and improve ease of doing business in Nigeria? Mr. Oyedele.
Yes, I think I already addressed the one about ease of doing business. So let me just address the one around BEPS. So BEPS is base erosion and profit shifting, and this is really the concern that the whole world is having to deal with now, about multinationals in particular moving profits everywhere and situating them where the tax rates are low or where there are no taxes at all. So there are a few measures in this Finance Act addressing that. One of it is the Common Reporting Standard. So the Common Reporting Standard is a treaty that Nigeria has signed up to, along with over 100 other countries around the world. And what they simply said to themselves is, I'll find out anybody who has a tie with your country within my territory, and I'll send to you. So imagine receiving information from the UK, from the UAE, those places that Nigerians like to go, the US, Bahamas, and then all that information is sent to the Nigerian government, of course, to be processed by the FRS. Nigeria also, in turn, has an obligation to find everybody in Nigeria who is non-resident, expatriate working here, or anyone who has dual citizenship, even if they are Nigerians. We find them here, collect data about them, their banking information, wealth, assets, and send it to the other country that may be of interest, for which they may be of interest. What that means is that when you have all this information, you can turn it into intelligence and just reconcile with the report the person has filed with the tax authority and say, okay, you have $2 million in the US, 2 houses in Dubai, 1 in the UK. Your return shows that you pay only 50,000 naira tax. Can you reconcile this for us? So that's a huge one for BEPS. The other one that is there is the fact that FRS now has the power to connect to people's, maybe I shouldn't say people, taxpayer systems, and to be able to get data directly. So what that means is also by connecting to your system directly, if you're a multinational, they'll see as you're moving things around, and they can then interrogate and question you as to what needs to be done. So the last one I'd like to mention is the significant economic presence requirements. So this essentially tackles non-residents. We had that introduced in the Finance Act of 2019. What the Finance Act 2020 has done is to introduce it under PITA. Sorry, the one of Finance Act 2019 was under CITA. So now Finance Act 2020 introduces it under PITA. So which means whether you're an individual, whether you're an enterprise or a company or a partnership, you can potentially be caught within the SCP net in Nigeria, and you have to pay taxes on your activities here in Nigeria or with Nigeria. So even if you are not physically present here.
Maybe I can just add to what Taiwo has said. Now, for those who may not understand, the philosophy behind BEPS, as he said, it means base erosion and profit shifting. So, and it's something that was kick-started by the developed countries, not actually by Nigeria or countries in Africa. And what they noticed was that the turnover of multinationals, right, seemed to be increasing, but the tax that was being collected from these multinationals by developed countries appeared to be going down. So the ratio of tax to the turnover of multinationals was reducing. So they figured something was happening. They was doing something that we don't know about, and that's what they meant by base erosion. The tax base was being eroded, and they figured that must be because they're shifting profits to low tax jurisdictions. So they started looking at it and trying to devise ways to catch or eliminate or reduce the opportunity for doing this, and that's of course what Nigeria has jumped on. In Nigeria, the tax to GDP ratio is one of the lowest in the world. It's probably 5, 6, 7%, whereas in some European countries it's 30 to 40%. So you can see. I mean, Taiwo said earlier that we are a poor country, but we don't realize it. Mm-hmm. The tax collection in Nigeria, or revenue per capita, is very low. So you got 200 million people. Your revenue per capita is probably 15 or 20% of that of South Africa. Even though we have a bigger GDP than South Africa, but they have a smaller population. So the same amount of money goes further. When you have a smaller population, so they can use that money to develop their infrastructure. So when we look at the infrastructure in South Africa, we marvel, oh wow, nice roads and all that, but it comes from money that's been generated from somewhere. And if so, to the extent that we are reluctant to task ourselves to generate similar amounts, then we will never have that infrastructure. No matter how big our GDP is. GDP is bigger, but per capita it is not. Their population is 1/4 of ours. So if we have a GDP which is similar, ours is not that much bigger than theirs, then you can see that per capita is 1/4 of theirs. So what can we build? So these are the things that we need to be thinking about. If we want to develop the country. Of course, the problem of the trust deficit is a big issue. The taxpayers in Nigeria are saying, well, government, we don't always trust government to use the money properly. And so there's a reluctance to pay what you should be paying. But that's a problem that, we can't solve with legislation. That has to do more with the administrators and the politicians.
Absolutely. I was going to add that, it's more, there's a lot more politics than administrative issues that are clogs hindering that. I'd like to take a couple more questions, and then I'll come back to the main questions to both speakers. But considering that a few people have posted questions, and there's one interesting question Uche Chukwu here is asking. How does the section on unclaimed trust fund affect shareholders who are yet to claim their dividends? What should one who is affected by this do? And I think, anyone who is open to answering this, please feel free. So people who have unclaimed trust funds, how does it affect shareholders of people who are yet to claim their dividends?
Okay, so let me take that. So one, the CAMA says that you can have your unclaimed dividend for up to 12 years. after which it will go back to the company and it will be distributed to other shareholders. But this Finance Act is saying that you can only, technically keep it for 6 years. Once it's more than 6 years, you haven't claimed your dividend, you should then go to this trust fund by force. So they're not asking you whether you want to lend government the money or not. So government borrows the money, and then you are then supposed to show up later on if you are interested or whatever it is that was keeping you away from collecting the money, and you're supposed to be able to collect it. One of the reasons why this has been very controversial it's the fact that the process for claiming that money back is not clear as of yet. Government has not fine-tuned it. It hasn't been communicated. So maybe someone will say I should go to Abuja, even though my dividend is only 5,000 naira. So certainly I won't want to go to Abuja to process 5,000 naira. So those are some of the things that I thought that government should have done first before introducing this. Interestingly, actually, the bigger amount is in dormant account balances. So my understanding is that combined, the unclaimed dividend and dormant account balances is somewhere around 800 billion naira. Unclaimed dividend is under 200 billion. So the significant portion of this is in dormant account balances. So if you have any dividend that you think you haven't claimed for up to 6 years or dormant bank account, just try and activate. So you can go to the registrars to try and process it. If you go to NSC website, actually it's so very simple. Go to NSC website, you type in your name, it will bring out everybody whose name is similar to yours and indicate the companies where they may have dividend. I think that's a good starting point. And then you follow with the registrar to see if you can claim it. For bank account balances, that's a little bit easier. Just go to your bank, pay in 1,000 naira or even 15 naira just to reactivate it, so it's no longer dormant.
Okay, thank you very much, Mr. Oyedele. And I think we'll probably come back to questions. Now I can see a few questions there. Slightly intertwined. But we'll come back to some questions after we've sieved them. But back to our main focus of conversation. I mean, we've had a lot. There's a lot that has been discussed, looking at opportunities, looking at benefits. We've also looked at things that could have been done a lot better with the Finance Act, and probably from a stakeholder engagement perspective, and also from the impact it has on businesses. But a question I'd like to ask, and this goes to both of you, is looking at, okay, so after having reviewed all this, what next for businesses? What would you, in your own opinion, and looking at from both sides where you sit, what would you say is next for businesses, and what should they be doing now in relation to the Act? So anyone's open to give it a shot first. So looking at it holistically, what would you say? What would you advise?
Well, I think what I will ask is, should they do anything differently? Because what the Finance Act has done is to amend existing legislation. So the legislation already exists, whether it's the Companies Income Tax Act or Personal Income Tax Act. And what the Finance Act has done is to just amend one or two bits of each one, not the whole thing. So, for example, your obligation to pay tax hasn't changed. All that the Act may have done is say, well, if you are paying minimum tax, it is reduced from 0.5%, 0.25%, but you must still file returns for the taxman to be in a position to assess. So I'm not sure that in terms of how, what they do every day, they need to change the way they do business, very much. Yeah, but I mean, the government is trying to make life easier in some respects, but at the end of the day, the main legislation is still there. It hasn't changed that much, just a few tweaks here and there. Yeah. Taiwo, what do you think?
Yes. I think just to add to that, I think if I look at it from the perspective of, say, taxpayers on one side, and that would include businesses and platforms, maybe organized private sector, for example, on one hand, and then government on the other hand. So I think fundamentally what everybody needs to do is just to understand. So seeking to understand what the law says is really important. Sometimes it's embarrassing to see that Nigeria has made a decision, you enact a law, But on ground, everything remains the same. So as of yesterday, people were still complaining to me on social media that they are importing vehicles and the import duties remain the same because someone at customs is not interested or is waiting for a letter. He's waiting for a circular. There's a law. Why are you waiting for a circular? So I think we need to start imposing consequences. If there's a law is, once it's gazetted, everybody knows. The same way you can say to me that ignorance of the law is not an excuse. It should not be an excuse for government. So if someone who has the responsibility to ensure that that law is implemented fails, there should be consequences. Let them be fired, something like that. And also, I think that the taxpayers and taxpayers groups need to come together to present their viewpoints when they're unhappy. Sometimes what you just find is a lot of complaints in the media, so traditional media and social media, but that's not how government works. So nobody will sit down and say, let's see what's on Twitter. So there has to be a platform to present these positions forward. And Mr. Emuwa made that point. We don't have to wait until the end of the year to make an amendment. For example, there was an error in the Finance Act to do with the reduction of minimum tax from 0.5% to 0.25%. Instead of saying year of assessment from January 2021 to December 2022, it says from January 2020. So the whole of 2020 is gone already. So why do you give me a relief that is backdated? And then the taxman says, well, because the law takes effect from January 2021, they cannot go back. So that's clearly an error, and those should be corrected. You can just write 2 paragraphs and give to the National Assembly, and they'll pass it, and the president will sign. We have made a mistake. Let's correct it very quickly. So those would be my own thoughts.
Thank you for that. I mean, clearly we're seeing evidence of endemic bureaucratic challenges, which obviously are not necessarily making the benefits accruable from the revised act that would people will be able to immediately see benefits from it. So if there isn't effective communication, whilst the law has been signed, certain agencies of government still would wait for a memo that's been initialed by someone to be shared with them before they act. I think that itself is a problem. And if little things like that are happening and have larger consequences on how people begin to immediately see how this amendments of the act or new provisions they can draw from it, then it is a problem. And I think that's something that we could possibly be looking at doing a lot better. I'd like to go quickly to a question here, and it speaks to some of the things we addressed earlier, and it's tailing to BEPS. The question goes, I mean, what happens if information exchanged with participating countries under BEPS? What happens after the information exchange with participating countries under BEPS? Are you mandated or forced to pay tax on income generated from outside the country of residence?
Okay,
so maybe you want to
just to make a point there.
Okay.
I think there was an executive order that was signed. After the raids order, there was another order which suggested exactly that if you had property abroad, they would tax it. I think the drafting of that order was a bit of a problem. They could have drafted it better. But basically what government is saying is, if we are aware that you have assets and we look at your income stream over the last few years, and that stream cannot justify the asset you own, it means that you've hidden some of your income from us.
Mm.
Now, this is nothing new. Again, people may not realize that some years back, there was a banker in Switzerland has or used to have secret bank accounts. So people who would make money and put it in Switzerland and not declare it to their government in America, to their government in Britain or France or wherever. And this banker was upset with his employers, and he stole some data pertaining to people's bank holdings, and he sold this data. And a number of governments bought data. I won't mention names, but some governments bought the data. And once they had that data, they were able to interrogate. They say, Mr. So and so, Mr. Denuga, we see that you have this amount in the Swiss bank account, but we look at your history, and you never reported any such income. How, it means you've been avoiding tax. Come and pay us what is due. So they use the data to interrogate. It wasn't that they taxed the amount itself, but they used that data to interrogate. And that's perhaps what the Nigerian government was trying to do, but they made it look like it sounded as if they were going to tax the asset itself, which really shouldn't have been the point. But this is the way it's done all over the world. So even with information that was clearly illegally obtained, it didn't matter. The tax people in those countries in Europe bought the data, used it, and collected the tax. Taiwo.
That's interesting. So
Yes, yes. Yeah, very well said. I think, if I want to just summarize it, I'll say it depends. Whether you pay tax on it will be a function of when we interrogate the data. So like Mr. Emuwa said, if you cannot explain where you got the original investment, so you're earning rent because you have a property in the UK. So you could have paid tax on the rent in the UK and you don't need to pay tax on it in Nigeria because of the double tax treaty between the two countries. But the money you use to buy the property, or at least pay for your equity component, can we trace it back to income of which you pay taxes in Nigeria? If the answer is yes, you're fine. If the answer is no, then you have to try and answer questions on the taxes you need to pay. Yeah. Generally, when you're a resident in Nigeria, you're liable to tax on your worldwide income. But a lot of the income you earn from abroad, dividend, interest, royalty, are exempted from tax if you bring them in through approved government channels. And in most cases, if it's a treaty country and you pay tax in the other country, you don't need to pay tax in Nigeria. So overall, I think the right way to say is it depends. Whether you pay tax on it or not, it's a function of so many things that need to be interrogated.
Thank you very, very much for that. I'd just like to take one last question. Okay, maybe not, but I'll see if there's anything that's relevant, because you've been providing very, very useful insights, and I'm sure attendees have found it very, very useful. And many thanks to everyone who's asked question. There is some area of conflict, and there's a question here around which to follow, particularly when it relates to threshold for preparing audited and financial accounts. So do I align with the Finance Act, or do I go with CAMA? So the comments here would be appreciated. That's a question from an attendee.
Okay, I think we tried to address that earlier. So there's an amendment in the Finance Act 2020, which says that FRS will, in due course, indicate what sort of reporting it would expect. So it recognizes that this discrepancy has been recognized, that it wouldn't be fair to ask you to do audited accounts for tax purposes if the CAC is saying dispense with them if you are below 120 million. So the FRS can now say to you, okay, we won't ask you for that sort of document, but give us something, less complicated, something basic, at least so that we have an idea of what you're doing. So that's what, in due course, I think the FRS will tell people, what they should do.
Okay, thank you for the clarity. Unless you want to add something to that to provide a bit more clarity.
Yes, just very quickly to say that I agree. I think that overall, we cannot say that one law is superior to the other unless the law says so. It's only this constitution that is superior to any other law. So CAMA and CITA are of equal standard or standing. So assuming there's a conflict and the conflict is sustained, then that means that you have to comply with both of them. In other words, if your turnover is 50 million, CAMA says don't do audited accounts. So you don't need to do audited account for filing returns with CAC. But you need to file returns with the FRS and it says must produce audited account. Then you have to go and prepare audited account. You cannot tell FRS that CAMA says I shouldn't. But the good news is, well, I'm not a lawyer, so if I'm wrong, you can correct me.
I do.
Yeah. The good news is that the CAC, the Registrar General of the CAC, were on the same panel together recently. And he said what they've done is to try, and I don't know whether they have that power on that camera, but by regulation, they are redefining that threshold of 100 million, and by reference to CETA, to say whatever the definition of small business is from a turnover point of view is what would also apply under CAMA to try and harmonize it. I know the language of the CAMA is at 100 million or any other amount. So I don't know whether any other amount means you can reduce it or whether it means you can increase it. So, but whatever it is, I think from a practical point of view, they are trying to align CETA and CAMA.
Okay, thank you very much for all the responses. And I think we will agree that it's been a very robust ventilation of thoughts. I think there's been questions, burning questions in the minds of people, business owners particularly, that have been answered. Two panelists, Mr. Emuwa and Mr. Oyedele, clearly experts in their field, have been able to clarify and give their perspectives on all these issues. I'm sure we would want to go on for longer, but I'm also managing time here. So a quick 1 minute from both of you, 1 minute summary. So what would be your, if you were to give a takeaway to everyone on this webinar with regards to the Finance Act, what would be your parting words in a minute?
Okay, maybe I should start. And I'll say my parting word will be, let's look at this Finance Act as a good initiative. The fact that we now have the opportunity on a yearly basis to look at what is not working. The business environment is changing very fast, so we can also be up to date as much as possible. It's a good thing. So we should see it as work in progress. And also, let's not look at it like it is us versus government. So we should look at it as this is something for Nigeria, and we're all stakeholders. Let's find platforms and opportunities that we may have to contribute into that process as a matter of an ongoing engagement. And finally, it would be good for us to be proactive rather than reactive. Thank you.
Thank you very much, Mr. Oyedele. And lastly, Mr. Emuwa, your parting words.
Yes, I'll just take off from Taiwo's last words, be more proactive rather than reactive. There's one provision which I don't think we mentioned during the course of the conversation, which is that the time from which tax is to be paid has been adjusted. So the taxman now says that when it is time to file your tax returns, that is when you should pay me the tax. If we have a dispute over it and you lose, I will charge you penalty and interest from that earlier date. Now, before now, the penalty and interest did not arise till much later. So in other words, especially for small companies who feel that they're not liable, you might find that at the end of the day, the penalty and interest becomes bigger than the tax liability itself. So if you're not careful with your timing, you end up with a situation where you're paying because you decided to have a dispute. But back to your point, it's good that the government is trying to make these adjustments, timelessly, as quickly as it can. So people should express themselves. In other words, if there's an area that's a problem, then whether as a group or as an individual, you need to say so. Speak up, let the authorities know that there's a problem in this area, and hopefully by the next iteration, they will fix that problem. So people should not keep quiet and think that there's no change can occur. Now they see that change can occur twice in 1 year, as we saw last year. So do speak up. Let your legislator know, let the taxman know, whoever it is you can reach. Speak up and let them know what the issues are for your industry or your sector or your business. And I think that in due course, it will be attended to.
Thank you very much, Mr. Emuwa. So what I take away from that, let's be very receptive to this. Let's not get very antagonistic. Where we have concerns, we have channels by which we can, make those concerns known. And hopefully that would become so with some level of advocacy. the legislation can come to can be put forward to make the necessary adjustments. So it's been a wonderful engagement. Thank you very much, both Mr. Theophilus Emuwa and Mr. Taiwo Oyedele. It's been interesting having a chat with you, and I'm sure there's been a lot of knowledge and learning taken away from this session. That's my interest is learning, so I'm sure everyone has learned a lot today. So I'll hand over now to Vice President of Nigerian-British Chamber of Commerce, Mr. Oamai Igeyi, who will take it over from here. So thank you very much, everyone. Have a lovely rest of the day.
Thank you very much.
Good afternoon, everyone.
Good afternoon.
Good afternoon, everyone. Yeah. On behalf of the Nigerian-British Chamber of Commerce and the President of the Chamber, Mr. Kayode Falowo, it is my pleasure, my privilege, to say a very big thank you to Mr. Theophilus Emuwa, who is the Managing Partner of Aelex, and then Mr. Taiwo Oyedele of PwC. I want to say thank you for your contribution to this webinar this afternoon. And I can assure you that it is full of a lot of education and information, especially to all the participants. I say thank you and thank you very much. The webinar is very practical and it is very robust, and we are very grateful to have you at NBCC, especially at a time as such as this. Thank you very much. My gratitude, of course, also goes to the moderator, Mr. Olasunkomi Adenuga. I say thank you. I particularly enjoy the format of this webinar. It's question and answer. And the questions that we have put forward, especially to the speakers, were very practical questions. And they were very engaging questions. And the answers that we got were also very relevant to the questions that we have put before them this afternoon. I say a lot of thank you. Let me also use this opportunity to acknowledge the presence of our patrons and our council members who made time available this afternoon to join us at this webinar. We are very, very, very grateful. Of course, it would not have been possible for us to have this webinar without our sponsors. And I say thank you once again to Aelex, who is our sponsors this afternoon. You probably would not know what you have done by creating this platform for a lot of people to come to learn. Because if not for your sponsorship, we would not have had this opportunity that we have had this afternoon. I say thank you very much, Aelex, for creating this platform for every one of us to learn from you. Of course, I will not go without acknowledging the presence of the professional services group. I say thank you for organizing this webinar. It's really the chairman. The gratitude also goes to the chairman and of course to the members of the PSG. We are deeply grateful for your contribution to the chamber within a very short period of time. Of course, the secretariat is always there for us. We are deeply grateful for your support, for your assistance, and for your cooperation all the time. We are grateful. Thank you, and thank you, and thank you very much. Let me just let us all know that we have a lot of upcoming events coming up at the chamber within the next few weeks. Of course, we have the Nigerian-British Trade and Investment Expo titled Unlocking the Future of Anglo-Nigerian Trade. And this is coming up on March 11 at 11 a.m. Please, I'm using this opportunity to extend this invitation to all our members. I'm also using this opportunity to extend the invitation to all our guests this afternoon. Please come over, and I can guarantee you that there's a lot for you to take away after the event. Of course, that is not all. We also have managing private equity stroke entrepreneurial relationship. This is coming up on March 18th at 12 p.m. Please, you are all invited. And then we also have digital marketing masterclass. This is coming up on the 7th of April at 7th of April 2021. Please, this invitation is also extended to every single one of you. Please, you are all invited. And it is not all about formal activities. The NBCC also has an informal activities, and one of them is the golf tournament that is coming up at Ikoyi Golf Club on the 16th of April 2021. It's on a Friday, and it's an opportunity for us to network. It's an opportunity for us to let people know about what we do in an informal environment. Please, let us come over. Let us support the chamber. All you need to do is just to look for, it's an opportunity for you to also give back to maybe your clients who are golfers, or to your friends who are golfers. It's just for a sum of 250,000 naira. And you have 4 of your friends playing for you wearing April 2021. And the last but not the least is the technology and innovation creating boundless opportunities. And this is coming up on the 21st of April 2020. I want to say thank you and thank you and thank you very much, especially to all our guests this afternoon, and to all of you who are not members of NBCC. In case you want to join the chamber, please feel free to reach out to Osereme or visit our website, www.nbcc.org.ng. Just pick up a form, fill it, and send it to the secretariat, and they will look into it and they will reach out to you. Once again, I say thank you to our sponsors. I say thank you to our speakers, and I also say thank you to our moderator. We are deeply grateful. Let us have a wonderful afternoon and enjoy the rest of the weekend. All the best. Thank you and thank you. DG, over to you.